I've written hundreds of business insurance policies over time, and these are the 5 business insurance mistakes that I see that are costing businesses thousands of dollars. So coming over my computer right here, this meme probably says it the best. If I had $1 for every business that chose the cheapest insurance, I'd have enough to cover their next claim. And that's honestly the truth. And what we're going to cover in this slideshow and video are the top 5 costly insurance mistakes and how to avoid them, how to identify coverage gaps, and if you stay till the end, we're going to have a pro tip to save even more money. So mistake number 1 is the cheapest policy. Cheap equals limited coverage. Comprehensive policy equals more robust coverage. So you have to find a middle ground balance of having a cheap policy and also having coverages that actually cover the nature of your business. What I'll see a lot of brokers do for their clients, and what I see a lot of clients do, is they're going after the cheapest policy, they're scouting the cheapest policy, they're changing brokers every single year, and that's not the way that you want to do it. So what a broker that's going to find you the cheapest policy is going to do is they're going to look at all of your different policies, your workers' comp, your general liability, and anything else you may have. They're going to put all that together. They're going to take a look at it, and they're going to be like, okay, client, let me see all of your vendor contracts. Let me see your contract from your landlord. And they're going to look at the insurance section and see what are the absolute minimum coverages that they can have. And then they're going to bring all of your coverages down to those minimums and then get rid of other things that maybe your previous broker may have had that were actually really saving your business. You know, they were really securing your business. And they'll remove things like, the general liability was higher than the minimum. Let's bring it down to the minimum. Oh, there's cyber liability here. None of the vendors are asking for it. Nobody's asking for it. Let's remove cyber liability. And that could expose you, like if you have a lot of customer data, for example, and someone hacks your database, one of the customers starts suing you because you didn't protect their privacy. And now that you don't have cyber liability, you might be exposed. And all that time that you worked on for your business, it may have just went to waste, because you're gonna actually spend lots of the money that you made paying out for those lawsuits, and you didn't get covered by the insurance company because you got rid of the coverage. So going cheap is not always the best, but there is a way to balance cheap and also have the correct coverages. So let's move on to the next. So here's a real life example of a cheap policy. One of my clients, they're a restaurant with a bare minimum insurance requirement from their landlord of the following: occurrence $1 million, damages to rented premises $100K, personal advertising injury $1 million, general aggregate $2 million, and then products completed operations aggregate is $2 million. These are the minimums. Where the cheap policy falls short: no coverage for business interruption. God forbid if they have a fire and they need coverage for a few months while they're rebuilding their damaged property. No coverage for business interruption. What are they going to do without that revenue? 2, exclusions for liquor liability. A lot of the time, these brokers they'll do the wrong thing and they won't cover you for liquor. Let's say 30% of your sales are for liquor. They won't cover you for liquor liability. They'll remove it completely and you don't even know. They're just saying, hey, client, we got you a way cheaper policy, but what they did was just remove your liquor liability. Now they're leaving you exposed. If anything, you're not being compliant in that situation, because if you're selling liquor, you have to have liquor liability. I can't tell you how many times I've seen restaurants without liquor liability. And number 3, insufficient coverage for high-risk kitchen equipment. Let's say, God forbid, the place goes on fire again. What if you had very expensive kitchen equipment? How are you going to replace it if you weren't covered by the insurance policy? What if you didn't have business, personal, property liability coverage? A lot of the time people don't have that because it's an extra coverage. A lot of the time a vendor won't require it. A lot of the time a landlord won't require it. You want to have that. Mistake number 2 is not reviewing your policies regularly. You want to go back and you actually want to review them. So let's go over this example. Year 1, start of the business. General liability insurance, this is what you start with. Property insurance, this is if you're smart, you have some property insurance, just like I mentioned before, if you have some kitchen equipment in your restaurant. Workers' compensation insurance, maybe you have a company truck, you want some commercial auto, maybe you have liquor liability. let's say, we're keeping this restaurant example. And then in year 2, you decided to buy some new equipment. Let's say you decided to hire some new employees. Well, now you're probably going to want some equipment breakdown insurance. Now you're going to want to insure any kind of equipment because now you have lots of equipment to cover. You don't want to pay for that out of pocket. Increased workers' compensation. You want to make sure that you're covered for all the new employees that you have. Cyber liability insurance. Let's say you have a POS system that stores the customer data. You want to make sure that you're protected there. And, let's say you had a breach. You're going to be protected from any kind of lawsuits. Let's say in year 3, you added a new location. Well, now you're going to have policy expansions to cover the new locations. You're going to have maybe business interruption insurance because let's say one operation burns down. Well, now the revenues from the other one are going to have to cover both of the places. You don't want that. You want yourself to be good. Like let's say one burns down, God forbid, and then you have the other one still operating. Well, you want this one to be covered by the insurance policy, not by the other location. And then let's say you want commercial umbrella insurance to cover all of the locations as a whole. Let's say if there's an LLC that you have both locations under, you don't want any kind of liability to go beyond one of the locations. And if it does, it's going to be covered by that umbrella insurance. So make sure reviewing policies regularly will actually open your vision up and be able to see these, new opportunities to be covered and new opportunities for extended risk, essentially. And if you like what you've been hearing so far, I want to introduce you to myself. My name is Alex. I am the CEO of CommercialInsurance-io, where we've developed the Total Risk Protocol. This Total Risk Protocol is essentially made for businesses that have $25,000 in premiums and up for their businesses every single year. So what we do essentially is a total coverage analysis when we look at your situation. Again, we go by the type of business that you have. If you have lots of customer data and you don't have cyber liability insurance, we will suggest that to you. And any kind of exposures or any kind of redundancies or gaps that we may have in your policy, we're actually going to tell you about those. If you have double coverages somewhere and we could save money and remove those, we'll tell you about it. If you have gaps, we'll let you know about that as well. We also do a comprehensive look into every single policy that you have every single year to make sure that you're properly being covered. And of course, we make sure that you have customized safety programs and also risk protocols to make sure to keep your premiums down as low as possible without hurting any of your coverages. So if you want to work with myself or my team, then visit quotes.commercialinsurance.io/total risk protocol and book a call with us and we'll help you out. Okay, moving on. Mistake number 3 is underestimating risk. Top claims you should be ready for. Property damage, fires, vandalism, or accidents on your premises, liability claims, injuries to customers or lawsuits over advertising issues, theft, employee theft or break-ins, flood or water damage from storms, leaks, or burst pipes. Many business owners think it won't happen to me. The truth is, these are the most common claims filed every single year, and they can cost tens of thousands of dollars without the right coverage. I tell a lot of clients, when I tell them or when I advise them to add certain coverages and they're like, I don't need that, I haven't had these problems in the last 10 years. Well, my question to you is there any guarantee that they won't happen in the next 10 years? Now that, if you've been operating, let's say for 10 years, you've probably grown. Otherwise, you would have closed down within the first 2 years. If you've been operating for 10 years and you've grown, well, your opportunity for risk has increased because now you have more customers, more sensitive data, more operations, more employees, potentially a bigger location, just more opportunities for risk. So we suggest never underestimate your risk. Here's an example of underestimating a risk. Right here. Let's say a commercial vehicle hits somebody, not a car or a truck, and the claim is very minimal. Let's say you're a logistics company and you have a fleet and you have claims like this pretty often where one of your drivers hits something and then you have a minor claim and it's not a big deal. You file it. Let's say they, God forbid, hit a pedestrian. Let's say your driver is exhausted and they hit a pedestrian. Well, in that situation, let's say they killed a pedestrian. That could be $1.2 million in damages. Are you covered for something like that? And if you are covered for something like that, is it going to hit your maximum coverages, and are you going to be exposed for the rest of the year? Who knows? You might be dropped, God forbid. You want to make sure that you're covered for these things. Think about it in this situation. It could be $200,000 in medical bills, $750,000 in settlement and legal fees, $250,000 of lost business, fines, premium hikes. It could be a big problem. So you don't want to underestimate your risk. A good broker will tell you what kind of exposure that you have, and if they recommend that you have higher coverages than what your minimums are for your vendors or for your landlord, then you know that you have a good broker. Mistake number 4 is relying on unresponsive or slow brokers. Slow responses equal missed opportunities and lost clients. For a construction company, for instance, let's say they need really quick COI or certificate of insurance turnarounds, and the broker doesn't get back to them within a day or two. They could lose a contract. Very annoying. So here are other opportunities where having a slow or unresponsive broker is a problem. COI needed, like I mentioned. Policy question. Let's say you wanna ask something about your policy. Contract renewal. You're hearing that your contract renewal is going to increase your premium by 50%. You're confused. You want to understand why. And then the broker is not responding. It's a problem. And mistake number 5, neglecting safety programs. This is the biggest opportunity. Before I even get into the slide, this is the biggest opportunity for savings without sacrificing coverages. And we have videos on this channel about opportunities to not sacrifice coverage, but also reduce premiums. But this, I would say, is the biggest opportunity. Safety programs reduce claims by 20 to 40% on average. Why? Because they produce a culture of safety within the environment of your workplace. The less claims your business has, the lower your premiums stay. And here's a fun fact. If your broker sends the insurance company proof that a safety program exists and doesn't just claim that it does, that could reduce premiums on its own. When we're filling out an application, let's say as a broker, I'm telling you how it works on the inside in our world. When we're filling out an application for you for insurance with a new carrier, there's a checkbox that says, is there a safety program in place? A lot of brokers will just check yes. Why? Because it's the right way to answer the question. Because if we don't check yes, then potentially we could just be denied from getting that insurance anyway. And if, even if they don't deny us, the premium is going to be sky high. So a lot of people will just check that off. A really missed opportunity is that, let's say you have a video program, a video safety program that you make all of your, let's say you have a logistics company, drivers watch every single month, every single year, whatever it is, and you actually send that video program link proof to the carrier, well, that could reduce your premiums even further. And we do this for clients, and a lot of brokers don't, unfortunately. Having a broker that builds you a safety program is a big fat win. Here's some examples of safety programs. Fleet safety, like I just mentioned, logistics, trucking, delivery services. So defensive driving training, telematics system, pre-trip inspections, incentive program for safe driving, distracted driving policies. For construction and contracting companies, you want on-site safety training, PPE compliance programs, equipment safety inspections, hazard reporting systems, emergency evacuation drills, restaurants, food safety training, slip and fall prevention, knife and equipment safety training, fire safety protocol, employee health awareness. You get the idea. Now, let's go back over here. Here's a bonus for this as well. If you actually show visually that you follow these things on site, and let's say you have a carrier that actually wants to come out on your site and check out what it looks like, if you're following these things that could be very obvious on site, that's going to give you a reduction immediately. Let's say, for example, you have the logistics company. The trucks are all clean. Tires are clean. Inside of the trucks look good. That's visually appealing. They're going to know that you take care of the trucks, that you actually care about safety. The tires don't look like they're bald and that they need a change. They're changed. They're clearly changed. Gas levels are full. Tank levels are full in all the trucks. These are the things that you visually want to show the inspector when they come, that you're actually taking care of your site and you actually follow your own safety program. Another clear indicator, telematics system. This is super obvious. You could actually see the telematics device. Very, very nice for the very nice for the carrier. They're going to appreciate this. So let's move on over here. Summary of the 5 business insurance mistakes. So going over it again, looking for the cheapest policy. Cheapest is not always best. We try to reduce the cost of your policies, but without sacrificing coverages. Again, not reviewing the policy regularly. We do that. Underestimating risks. We don't want to do that. Keeping unresponsive or slow brokers. We don't want to do that either. And neglecting safety programs or picking brokers who do. And again, if you're a business owner and you want someone who doesn't do this, or this, then book a call with us and we're going to help you out. Thank you for watching.